Hello and welcome to a brand new show of Market Makers. My guest on the show today is someone who has this uncanny knack of connecting market behavior and market trends. He tracks fundamentals but believes that market or investing is not just a science. You also have to analyze market behavior and ownership patterns. Sandeep Tandon of Quant Capital. Sandeep, fantastic to have you back and thank you for joining us. Now, 2016 has been heck of a year.
Yeah.
It corrected, then we've seen a monster rally. Everyone is surprised with the recovery, no one has participated, and there is sheer desperation or despondency on the street.
Yeah. See, I'll put this way. In fact, right from 2016, we have been talking about that 2016 will be overweight trading strategy and underweight buy and hold. That has played out reasonably well in last few months, and we believe that disbelief still exists. So market has still potential to continue its upward movement. I'm not talking about only India, even US market we like a lot. Okay, it's close to 52 weeks high, and people are still bearish.
Equities as an asset class, they do well when there is strong global growth, when the underlying economies are doing well. If I look at the global picture, growth is not there, economies are contracting, central bankers are desperate for inflation, and margins are at a record low. So the turf for an equity investor is not very favorable.
See, from fundamental perspective, answer is yes, okay. But there is also element of leverage which people play in the market, okay. Because of this negative news or degrowth story which we are talking about, people are extremely bearish. People are holding a huge short position. Look at the classic example of crude, okay. Right from 2015, crude started drifting down, and closer to January, when we made a bottom call at $26 on 27 January, though people were talking about $10, $15, $12. And look at the leverage short. If you look at the ETF data, the leverage inverse ETF data is one of the highest levels, okay. And this is a clear indication, and look at the rebound which has happened. It's nearly up 100% from that bottom. And so is the case with the commodities. People are fundamentally not bullish, but most of the commodity stock has given you 100% to 200% return in what? Last 5 months, 6 months?
So is the trading bounce in commodities over?
No, I don't think so, okay. People are like, if you ask me, in last few months, up to large extent, people have covered their shorts, okay. People have not really built a massive long exposure. So unless you see a massive long exposure coming back, till the time, I think these sectors has potential to move up further.
So are you talking about commodity stocks, or are you talking about only commodities?
I'm looking at both.
So you think commodities as a cluster and commodity stocks as a basket, they both have potential to do well?
Let's from a starting point, crude clearly bottomed out. I don't think you will see $26 again in 2016. My view is that we are closer to a trading top right now. Maybe it can go to 53, 53.5, but bias is positive right from 2016 and 2017 onward. And we have a historical, we see when crude bottoms out with lag effect, copper bottoms out with lag effect, other metals bottomed out. And we are equally bullish on the agri space. We talked about sugar, we talk about coffee, we talk about wheat, okay. The agri is the next boom which is unfolding globally.
What is driving the market right now, liquidity or fundamentals?
I think it's a fear which is driving the market, okay. So right from 2008 post Lehman crisis, everybody has some fear or other, okay. And we have seen many reports coming out highlighting fear. It's easy to sell fear, okay. We have seen in 2015, even beginning of 2016 also, the fear still exists at the back of the mind. People are not comfortable. They don't believe, and that's the reason market is holding very. If you look at the quant fear index in the month of February.
That's a proprietary index.
Yeah, okay. It was second highest level after Lehman crisis, okay. And after Lehman crisis, when you see a fear index spiking, capitulation index spiking, Nifty has given 3 to 4x return, and stock obviously has given some 8 to 10 times returns, okay. And at least if you look at even one-time return from February lows, okay, which is 6,800 or 7,000 levels on the thing, we are talking about at least 14 to 15,000 Nifty coming back in maybe in 2 years' time.
That's an optimistic view, and for that to happen, you need a lot of earning support. You need a solid P expansion, and I don't see that happening.
So if you look at even this quarter, the previous quarter, people were very bearish in terms of earning also. And if I look at create a breadth parameter in terms of positive surprises versus negative surprise, I think positive surprise was significantly more than the negative surprise. So baby step or early steps or early stages are clearly visible, okay. So I think it's a question of time, you know.
But is there fear in the market? HDFC Bank at an all-time high, IndusInd Bank at an all-time high. Yes Bank is a 4-digit stock. 2 days ago, Infosys hit a fresh lifetime high. So where is fear in this market? Yes, I can talk about commodities, I can talk about some engineering and infra names, that's about it.
And participation is not there. So, okay, the prices are moved up, like you rightly said, from 6,800 to 8,300, which are close to 8,300 now, 1,500 points. How many people have really participated?
How would you define participation? Flows are at a record high.
No, flows. You also look at number of trades data, which is not showcasing anything like this. Okay, retail participation is missing. Okay, whatever participation has come through mutual fund, you can say is quasi retail. Answer is yes, but real retail is not come back to the market. Ultra HNIs are not back because they are stuck with a lot of mid caps names, and they have not participated. It was more of a large caps driven rally and short curve driven rally rather than a broad based rally. So broad based rally has not happened.
So do you think we are on a threshold of an economic recovery?
Answer is yes. It's very early stages, but signs are very clearly visible.
Capacity utilization according to RBI is only at 72%. The entrepreneur, the entrepreneurial spirit currently is missing right now. Whatever spending is coming, it is coming from the government shore. So for a real economic pickup, you need capital commitment. Where will that come from?
See, if you really look at these things, will always takes time. I always say market will be ahead of before earnings bottoms out. So will it 6 months, whether sometime 1 year? I think it's a question of maybe an additional 1 more year will take for the capex cycles to come back. I'll give you a very classic example of 2012. Okay, August 2012 when S&P fear downgrade was there, India downgrade fear was there. Right from Manmohan Singh or Chidambaram or Montek, everybody capitulated. Okay, eminent people started talking about India growth coming back to 4.5%. That was the classic sign of bottom. So the people who are sitting on the driving seat have capitulated. Now there's something similar situation is happening. The people who are entrepreneurs who are in the driving seat of their own companies, they are worried. They are capitulating. Okay, and there's the classic signs of bottom formation when entrepreneur gives up. Okay, which is the case which is happening in last few months.
So where are you picking your spots right now?
See, from a longer term perspective, we still remain bullish on select consumption, select pharma, select IT. But from a new theme perspective, I think financials will do very well. We were relatively early in making that call, and then we have seen a small rather deep correction happening. Okay, I think financial will come back, including public sector banks should be the theme. If you have to really play the India economy growth play, I think the financials should be a stock, or maybe banking sectors in particular.
What can one buy in financials? Private banks are already at a lifetime high. NBFC stocks, at least the big ones, Bajaj Finance or a Cholamandalam, they're priced to perfection. If I look at BSU banks, you don't want to go down the ladder, and your choices are maybe an SBI or a BOB, at max a Union Bank.
So I completely agree with you. So our top 3 picks will also be largely SBI, BOB, and maybe whether you look at Canara or Union, in that. So 3-4 names will come. I think what market is clearly understood that large caps banks will become even much bigger in terms of consolidation, what government is talking about. So people would like to focus on a clearly large cap companies. When the flows start coming, the first flow will come to the SBI, it will not come to the second line names. So obviously focus should be on these large names, and my personal view is that these stocks have potential to give you more than 100% return in 2 years perspective.
So from a 3-year perspective, do you think SBI will make more money or HDFC Bank will make more money?
Clearly SBI will give you more delta than an HDFC. But if you look at it from a risk perspective, a lot of people are still comfortable. So we are not bearish on HDFC Bank, when HDFC Bank should do very well. But from outperformance perspective, from these levels, I think SBI will outperform.
The general view is that private banks will do better because they will keep on gaining market share. The consensus opinion is that PSU banks, they need capital. They don't have capital, and whenever the economy will recover, they will not have the muscle or the financial ability to participate.
See, all these thought processes are there as closer to the bottom as market, like we talk about where is the money to buy, and market moves up, you see huge money pours in, okay. Same thing I'm looking at, if you look at in last 12 months or last 4-5 months rally which we have seen, it's all under-owned stocks people have moved up, stocks which has moved. Either people were short on these names or they were grossly under-owned. We talk about the Larsons of the world or Hindalco or Tisco, Telco, the under-ownership was there, okay. Now, if you look at similarly under ownership exists even in the public sector bank, okay. Rather, a lot of people have actually capitulated in the month of February, okay. So if you have just sold in the month of Jan-Feb crisis, you are not going to come and participate immediately. But my sense is that it's a question of few more months, maybe another 1 or 2, where you see money coming back to the public sector bank, because under ownership is the theme which has played out very well in last 1 year. Anything which is under owned and see small trigger, market prices have moved up. Anything which is grossly over-owned, and maybe only exception what I will say could be the private sector bank, whether you talk about Indus or ES or maybe Kotak, up to that extent, they're grossly over-owned, still performs.
Do you think private banks now will struggle to give a 15% compounded return from these levels?
See, if we are extremely bullish on the market, overall market, when you're talking about 14, 15,000 or 16,000 Nifty in 2 years' time, I think they will also deliver, okay? But if you're looking at a relative outperformance versus public sector bank, I think public sector bank has potential to outperform, okay? And absolute, I think getting 15% return, I don't think any doubt on the private sector will also deliver.
Every bull market creates a new sector, it creates a new hero. Like we say, courses remain the same, horses they change. So where do you think, apart from financials, where else do you think there could be a leadership positioning?
See, right from 2000, so this bull run started, the previous bull run peaked out in the beginning of 2008, and maybe you can say from March 09, the real bull run started, okay? And then the stock of the sector which started performing, whether it's a consumption, pharma or IT, these were the three sector which was born in that bear phase, okay? And according to our theory, this is a sector which will continue to outperform. You could be seen of phases where right now we are seeing pharma under consolidation or massive correction going on because large companies are facing issues, okay? But I will still call it these as a corrective phase. So all these three sectors still remain as a leader for a longer term perspective. Maybe financial could be another theme which you can play. So I think if somebody has to look at whether IT or consumption or even a pharma has peaked out, the answer is clearly no. Maybe they are getting into consolidation phase. My sense is that if market has to peaked out, let's say in 2018, 19 or somewhere in that time frame, then I think this sector has potential to move up. Maybe stocks will be different. It's not necessary the same Sun Pharma will perform, something else will perform. Maybe it's not necessary TCS will perform. Maybe Infosys is performing. So the stocks can change, but the sector still has, we remain positive for that.
So how do you think the puck would move within IT? Do you think the Wipros and the TCS of the world will struggle? Now it's time to go down the ladder, maybe revisit a Persistent, Tata Elxsi, Mindtree.
So clearly the labor arbitrage related focus company, that has changed a big time. So you have to look at the product company and the new initiative which is coming, whether it talked about a cloud or analytics or product related thing. So I think clearly from a long-term perspective, Infosys is the key thing which we are looking at. I think Infosys has been outperformer right from September 2014. I think Infosys will outperform big time. And then you focus on the mid-cap space, which is more of a product company. Some other company you talked about could be Tata Elxsi or maybe Persistence of the world. Okay, they should do very well.
Infosys is a great company. The stock is sitting at a lifetime high. Mr. Sikka is doing good things. He's trying to reboot a 30-year-old company. But the challenge for Mr. Sikka could be that the new business will be small and the legacy business will still be very large. For him to turn around a big company like Infosys, it actually could take a couple of years.
But he is doing with a different pace, okay? And second thing I also want to highlight, when money shift from one stock to other stock, it takes its own time, okay? Like a lot of people have still disbelief in terms of delivery, okay? So in last 2-3 years, the price, obviously price is something which gives you confidence that something has changed in the Infosys, okay? So prices is definitely giving that confidence, and genuinely if you look at his strategy has been pretty good because his own background comes from a product background, so his understanding on US market is far superior. A pretty hands-on man, okay? So I think it's a very early stages that money has shifted. If you recollect, people are very bullish on HCL Tech, okay? Okay, we were one of the few guys who were bearish on HCL Tech because of huge discomfort on the management related thing, and people have rated HCL Tech very well. It's a very classic example. Now the de-rating process has started, okay? Money is shifting, okay? And money will shift towards Infosys money. So whenever de-rating start also, that also is a process. It takes 2-3 years for people to move out, and something when money shift from bond to equity or one asset class to other or similarly one stock to other, it takes time. So I think that from that process is still not peaked out. If you're looking at an answer whether it is peaking out, answer is no.
That same money shift I think is also evident in large cap pharma. Money is moving out of Sun Pharma, money is moving into Norvindo, money is moving into maybe NDVs. So do you think within the pharma space also chop and churn now will be evident?
Yes. Okay. See, I think the Sun Pharma de-rating has just started. The way you look at the Bharti de-rating happened few years back, okay, and Bharti is still not recovered, okay. So similarly, I believe the Sun Pharma de-rating has started maybe a year back or maybe 2 years back, okay. It's a gradual process. Now it is gathering momentum, okay, where people are frustrated and forced to shift from a sun or loop into some of the other names, whether you talk about Arvindo or talk about DVs or maybe few other names.
Are you making a case that it is now time to ignore large cap stocks from the leadership groups? I mean, don't buy a TCS but buy a Persistent, don't buy a Sun Pharma but look in Aurobindo?
No, I am not saying that. I think it's a phases, okay? So you see one phase of large index heavyweight perform. Maybe second phase come when some of the mid caps will perform, and with the lag effect, again, these names will come back. So if you look at 15,000 target for Nifty, then large cap will come back. It's not like they're peaked out from a trading perspective. Maybe I'll say consolidation is a better word. So one round of big move is happening. So like from 6,800 to closer to 8,500, okay? Market can consolidate between 85 to 8,700 for a few months before you see a neck up move.
So let me divide the market into three brackets: short term, medium term, long term. When I say short term, 3 months; medium term, 1 year; long term, 5 years. So what do you think has potential to outperform in the short term, medium term, and long term?
Okay, so from a short term perspective, pure hedging business which is there when people are created some amount of hedges, which is the very classic case in this earnings seasons when the positive surprises were there, people were forced to cover, okay? So that sort of action you will see. I think that short term up move is largely over because earnings seasons is largely over now, okay? From medium term perspective, I still believe where the under ownership exists, okay, and some sentiments are changing, those are the sector or stocks will do extremely well from medium term perspective, okay? Could be public sector banks, could be one of the examples, okay? The way you have seen commodity prices or commodity stock, Hindalco, Tisco, or Vedantas of the world, okay? I don't think they have peaked out from a trading perspective also. So from medium term perspective, I think these are stock, whether Telco or maybe now Mahindra is also there. These are the stock which should perform from medium term perspective. From long term perspective, your core earnings call, pure fundamental calls, so we talk about whether it's Infosys of the world or let's say Arbindo's of the world, should do extremely well.
What is your big global call for 2016? 3 months ago it was buy crude. That call has worked like a charm for you.
Yeah.
But what is your big call for the second half of this year?
Okay. See the real, if you really sit down and analyze when we talked about $26 crude bottoming out, we are also talking about the risk profile has changed, okay? We are coming back in the risk loving environment, okay? But since we already seen a 90% up moves, people will take some own time to digest, okay? My view is that 2016 will be relatively still more choppy. We'll see sharp up move, sudden fall, and then again sharp recovery. That sort of thing continue till this election unfolds in US. This is a very big event. Britain exit is also a small event which is unfolding this month. So I think some amount of volatility will remain, which can lead to wild swings in the market. But if you are looking from a longer term perspective, I think 2016-17 should be one of the most memorable year for us.
So Trump versus Clinton, what is the market positioning?
See, the way I look at, if given the clear indication which he has given that he will like to replace Yellen, okay, a clear indication that some politics is going to unfold out there, which is there. I think deferment of Fed rates, okay, keeping strong a weak dollar is a clear indication that market wants to support Hillary Clinton, okay. If Trump comes into picture, then things might change from November onwards, okay, which can lead to a bigger up move in dollar index. So that's the reason I'm saying till November, I see dollar small correction or consolidation before you see one more leg up before it peaks out.
But markets are not prepared for Trump, they're prepared for Clinton.
If market is not prepared, then you can see somewhere sharp reaction coming in the month of November.
Are markets prepared for a weak rupee now?
In fact, we have other way. View is that rupee will appreciate. Okay.
So if you think rupee will appreciate, why are you bullish on IT and pharma?
I think there is no correlation, frankly speaking. It's more of a sentiment. If you sit down, and I've seen last time also, you put a correlation chart with the earnings, you will not find real answers. Okay. After 2008, everybody has changed their strategy. Somebody could be hedged 100%, somebody could be 50-60%. Most of the people are hedged. Okay. And then when the moment you see 1.5 months of trend, people are forced to create further hedge. So I'm not looking at from a sentiment value, but more from a fundamental perspective. I think rupee will appreciate. Our big call is that rupee is heading towards 58 in years time. By 2017, rupee will be heading towards 58.
What will happen to all the exporters then?
See, I think it's adjust. Okay, it's not like, we have seen DXY happening from 77 to 110. What happened to US companies? Okay, they were also suffering, and the exporters. Okay, all the MNC was crying, but ultimately 100 also closer to 100. Also S&P was close to the 50 to
efficiency is always kicking. I mean, the entrepreneur does not want that currency cushion.
And which is a very
is the volatility.
Yeah, which is a huge positive for Indian markets. Okay, like you look at 68, people were talking about 75 levels. Okay. We think 65s could be reality maybe in somewhere in the month of July itself, you see, and it's a gradual appreciation. Maybe the Britain exit happen, maybe small impact. The bigger impact which I'm worried about, if something really changes happening on the P-note fronts, okay, which we're talking about, the KYC or transferability clauses, all those things can trigger some pressure on rupee if it happens.
Okay, so let me get just closing comments from you. We've talked about large themes, we've talked about large sectors. Now, you also like to identify mid-cap sectors and niche sectors, whether it is hospitals or home textile companies. So if you have to look at the market from that prism, a mid-cap theme, what will be that mid-cap theme?
So tough one, frankly speaking, because valuations are not cheap. Okay, it's like as compared to a few years back when we used to talk about mid-caps. But my sense is that the only theme which we are changing is that we want to move out from mid-cap pharma. Because of this FDA related issue, the mid-cap pharma company needs more investments, okay, which clearly means the free cash flow will fall, ROE will fall. So it means mid-cap companies has potential to become a small cap. Okay, no, they are large cap company, and large cap can become ultra large cap or mega large cap company. So the companies which will survive this phase will become very meaningful. Okay, so we are worried about mid-cap pharma, which we used to be very positive about it. Mid-cap ITs, we still remain positive. Okay, mid-cap consumption themes, we still there. Big list on the consumption theme which we can play out, okay, and last few months they have corrected 30%, 40% sort of thing, so that could be a good opportunity which is there. I'm not very bullish on the mid caps cyclicals, okay, maybe cement could be another theme one can still play, still has potential, but when you talk about recovery happening for the old economy stocks or the banking space, then I will play a large caps name because they have not played out well before moving to the mid cap space.
So you're not worried about Patanjali?
I think we have seen phases like Nirma also, okay, so Nirma also happened and lever still exists, okay. So I think market is also expanding. What a lot of people are missing out, that market is not expanding, market is also expanding, okay. If you look at the Colgate numbers are not bad despite Patanjali, 350 crores. 7%. Yes, Dabur numbers are not bad, Lever's numbers are not that bad. So it's a clear indication that market is expanding.
And why Nirma versus HUL? I mean, we've seen P&G versus HUL, we've seen price war between cola companies, and they both still coexist.
Yes. So it all depends on the product
market
quality
and is there. But in general, if you have to summarize today's interaction, you would say that the real bull market has started. And for those who've not participated, go and check your asset allocation, because next 2 or 3 years, this market will give you bumper returns.
Yes, buy on dips should be the strategy.
Why buy on dips? If
any crisis
is headed to 14, 15.
No, I'm saying if you want to increase your exposure, so buying on, let's say this rally peaks out and closer to 85 because of Britain exits. We also expect some amount of
so what
choppiness
is a good time
will increase.
To buy? If you have to speak in Nifty terminology, what is that good time to buy?
My sense is that if closer to this 20th June drama of Fed and Britain exists, okay, around that time till first week of July, by the time you get a monsoon, more clarity, that's a good opportunity to rebuild your exposure.
And what if markets don't correct?
If they don't correct, then gradually you have to build. My personal view is that it should correct because there's a big fear element which is there. People will prune down their exposure, so there will be a correction happening. Not only in India, I'm seeing a correction happening even in US equities also.
But
from a trading perspective.
Users decline, this could be the last decline.
Could be last decline.
And you don't think 6,800 is coming soon?
I don't think so.
That's history now?
History. For a few years, it's history. Not for a unlimited time frame, but for a few years, definitely.
I was looking for that answer. Really appreciate your time and glad you could join us. That's it on this edition of Market Makers. I'm Nikunj Dalma signing off. Thank you for watching the show.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.